Hello and welcome to Money Control. Well, my name is Shataj Anand, and today we're going to talk about the budget 2021 and its impact on markets and investment. Well, to join with the discussion, I have Sandeep Bhardwaj, who's the CEO retail at IFL Securities, and Jaideep Arora, CEO Sher Khan by BNP Paribas. Well, welcome to the show, gentlemen. And what a budget it has been. It has been a landmark budget. It promised everything what finance minister said that it's going to be the best budget one have seen in the last 100 years, and the equity markets are in a joyous mood. In fact, since the budget day and including the budget day, we have traveled, or you could say that the market capitalization has risen to 200 lakh crores. Sensex touched 51,000 today. Nifty 50 has also climbed amount 15,000. So all in all, after 15% rally in the year 2020, nobody was sort of expecting that we could see another 10% kind of a gain in the year 2021, and that too around about budget. Because in the run up to the budget, we have seen 11 lakh crores of investor of market capitalization gone in a matter of days, around about six trading days. So all in all, I think budget promised three things, and those things are growth, growth, and growth. The RBI monetary policy, in fact, was an extension to the budget, and it proved that markets are rejoicing that. Now, to take the discussion forward, I would like to first, pitch the question to Mr. Arora of Sher Khan that, what are your big takeaways from the budget?
So the big takeaway is obviously it's a very great budget, and I think markets are already showing that. I think the most positive thing was that compared to the earlier budgets, where the focus was more on the fiscal prudence, and that was a fear all of us had, that post this COVID crisis, fiscal prudence versus growth, and the
Yes.
answer has been given very vehemently. It's growth and growth. Not only that, it's not only about this year and the next year. The guidance is till year 2025. The target is that they'll do 4.5%. So it's a very long-term trajectory of growth, what has been forecasted or guidance given by the finance minister. That I think is the most positive feature of the budget.
All right. And Sandeep sir, what are your takeaways from the budget 2021?
Yeah, hi Shitesh. Thanks for having me on the show. So my biggest takeaway from the budget is two. One is finance minister is able to remove the fear amongst the people mind of introducing new taxes, where people were
Yes.
anticipating the new taxes is going to be rolled out this year, but they fortunately they didn't focus on that way. Second thing is they focused on growth and development. And
Yes.
as they kept fiscal deficit for next 2 years is 9.5 and 6.5%, and they focused a lot more on growth, which was, even if I look at 250 basis point higher than the market expectation. And most of the sectors are also being covered. So in the time of pandemics, budget coming like this is itself revolutionary.
Yeah, absolutely. And in fact, all kudos to the finance minister and the proposal which have come out. It has been bold. They are revolutionary, paths breaking. These are some of the gestures that many of the experts have used. And I'm sure the rating agencies will take stock of the same. That we are hoping that they should not look at the fiscal deficit at this point in time, which has actually climbed above 9%, but then look at the way the reforms are should be part of the focus now. What are your views on that, Mr. Arora? That do you think that we could see another downgrade or upgrade could be in the offing, looking at the way how green shoots in the economy are coming along, and a lot of global voices such as IMF as well have also given the go ahead that budget is growth focused.
So it's very difficult for me to predict what the rating agencies will do, but the environment is right that India should show that is ready for growth. And I think the international context is that most of the countries are running higher deficits. So I read somewhere that UK is having one of the highest post-war deficit. So I'm assuming that the international context and what's happening around will be a key consideration in rating India. And the important thing is that the deficit is for financing growth, and there's a lot of emphasis on capital expenditure. So as long as we can show clearly that this is good investments and result in growth, will result in higher revenues in the future, and deficits will be soon made up. I think we have good case for defending our rating. We have positive inflows of foreign inflow, a good currency reserve. So all the macros are in place to defend a good rating by the rating agencies.
Right. Well, all eyes on that. And, both of you guys track retail investors very closely. And in fact, if we look at the year 2020, the biggest, you could say, standpoint was that a lot of retail investors joined D Street Party. In fact, 10 million got demat accounts got added in the year 2020. And the budget, in fact, also was something which is pointing towards the growth. And if in case economy is growing, then India Inc. will also grow at the same time. So at least the seeds of growth are already sown. It's just that India Inc. has to harness that kind of energy. And if in case earnings are growing, then market will also grow, and that will attract more retail investors to the bulls party that we have seen in the year 2020. In fact, if somebody would have invested, let's say back in March 2020, when we hit a low with respect to Sensex 25,500, something like that. Now we have, in fact, Sensex has doubled, and there are a lot of stocks which have more than doubled in that similar period. And a lot of, not just large caps, in fact, a lot of mid and small caps have also joined the party. And one more difference I have to bring here is that if you look at the year 2020 and 2021, in the year 2020, when Sensex hit a record high, then the only stocks that were rallying were the large cap stocks. That means HDFCs of the world, RIL or ICICI Bank, but not broader market was not that participating in that particular point in time. But now in the year 2021, when markets hit a record high in the month of January, we saw a broad-based rally, and that really points towards the fact that money is spreading across and not just to few stocks. So with that point in focus, Mr. Ora, I want to put it across to you is that what is the kind of interest that you've seen from retail investors in the year 2020? How the growth has been for Sher Khan in that particular point in time, and what is the way forward?
So on the overall macro scenario, if you look at it, in fact, retail have been the smarter investor this time. Traditionally, we've been told the retail sell at the high, sell at the low and buy at the high. This time, if you see, retail investors have entered at each lower level. In fact, if you see, the industry was opening 300,000-400,000 accounts per month prior to the COVID, and now it's opening almost 1 million. The retail investors have come at an index of 7.5, 8, 8.5. I'm talking Nifty, and they have continued the whole thing. So they've anticipated and they have entered at the lower level. So obviously, they're sitting a lot of profits. So I think as the facts have borne, the belief has been right on the resilience and the growth of the Indian economy. And I think it's across the stocks. Mid cap, small cap indices also are making, at least multi-year high. So I think it's a positive thing, and the momentum should continue because we are seeing continued account opening. From a Sher Khan perspective, if you have a, Sher Khan has now also launched a discount broking platform called Espresso. So Sher Khan is a full service broker. As a combined two entities, we are now doubled our account opening rates prior to COVID to now. So that has been a tremendous growth for Sher Khan and Espresso.
Right. And Mr. Bhadwal, are you seeing a similar trend in IFL as well?
Yeah, Kshitij. So, as a few numbers were shared by the Jaideep, is the industry has already witnessed, 1 crore plus numbers in last 12 odd months. And the trend continues. In fact, the trend continues with a higher growth. Last month, if I look at the only last month number, it was 15 lakh plus demat account came. And the good part is that most of the participation happening through millennials and the tier 2, tier 3 city, people. So there's a holistic participation coming to the markets, and which is taking markets to the newer highs. And I see this trend continues even in the future. As far as IFL is concerned, we are presented across all domains of online, B2B, strong B2B market, and wealth management. So our growth is also in the similar lines of what has happened in the markets. Our numbers are also doubled up, and with the technology and digital adaptation with tool, we expect IFL also to grow significantly.
Right. I think just like markets, where the rally has been broad-based, I think participation of retail investors has also, it has come of age. You could say that not just from metros, but we are seeing participation across the tier 2 and tier 3 cities, which is actually a good thing. Mr. Ora, if you want to probably highlight some more points towards that, any trend that you're seeing, what is the kind of money that is being poured in from tier 2, tier 3 cities?
So we have seen a clear, distinct change in terms of the account opening being higher
Right.
from tier 3, tier 4, tier 2. So
Yeah.
earlier it used to be around 30-40%, is as high as 66%. At least we are finding with our new offering. I think the fundamental drivers are, obviously there's a lot of interest which is there. Second is the account opening process has become very easy with the new initiative by the regulators. Customer can actually open the account without a physical paper, without having the need for a branch or a local office in the local place. So those things have really the digital adoption and the awareness of the markets, and obviously the positive environment has triggered that. This is what I believe. Another aspect is that the content is also is available for retail customers in local languages. So that also is something, is a key trigger point. So earlier it used to be very just English driven, and that really kept the tier 3, tier 4 isolated, but that's something which is changing now. So that's another factor which is driving this.
So multilingual languages is
Yeah.
something which is
Yeah.
really the focus here. And why not? There's a huge party on D Street, and we want everyone to participate in that. And as a technology partner, you are at the forefront of it, and we're seeing the fruits of that happening in the retail market as well. Now that now that we've discussed that a lot of retail investors have come and joined the party, what would be your advice to retail investors? For the year 2021. Yes, it has. The year 2020 was a golden year. Nobody was expecting that. Probably both Sensex and Nifty could rally 15, 14, or 15 odd percent. But then again, 2021 has turned out to be even better than the year 2020, and that too in a pandemic-like situation, which has, no one of us has actually experienced that in the past, and there's no model as such which could actually predict as to what's going to happen in the near future. So how, any experiences, Mr. Bhadwa, that you can share with the viewers, and what were your recommendations to retail investors now?
Yeah, sure, Kshitij. So as I mentioned earlier, the most of the accounts are getting opened through tier 2 and tier 3 city. And one more data input, if I share with all of you, the average age of a customer.
Yeah.
Average age of a customer is reducing. If I look at average age, it stands somewhere 29 years. So the retail customer is already smart and educated. So they know when to invest, where to invest, and they took the maximum advantage of the pandemic. When the markets were down, there was a heavy participation from millennials, and they kept investing at every lower possible levels, and they get the maximum possible returns. So I feel that market has a lot more potential, and one should continue to invest in markets and rebalance their portfolios on the stocks, on the mutual fund side, which gives the better opportunities, and being watchful and mindful, and do proper asset allocation in terms of debt and gold as well.
Right. So we'll come to the asset allocation part, a little bit later in that. But to start off, what is the kind of growth you see for the brokerage industry in the year 2021? Any expectations or any figures that you have in mind? And the budget might not have given any incentive, but there's plenty of wealth to be made if investors follow discipline. What are your thoughts, Mr. Arora, on that?
So the underlying macro which we track in the industry is the account opening. That will continue. I think industry will continue to open almost a million plus account or 10 lakh account every month. That's one trend we see. I think is quite visible because of the larger participation. Historically, market volumes have been growing around 15% annualized. So I think market should be in line with that. There may be some consolidation in the second half. Our brokerages, obviously, there's a discounting happening. So, but overall, I think the positive trend, 15 to 20% growth is possible in the brokerage business.
Right, 15-20% kind of a growth possible. What are your expectations, sir? Sandeep, sir?
See, I also feel that as of now, industry stands on somewhere around 45 million as a whole, customer base. And next 2 years, 24 months to 36 months, I expect it to be doubled. And the lead trigger has already happened in year 2020. And as looking at 2021, I expect industry to open at least 2 million plus accounts, which will fuel the next trajectory of growth.
Right. Now that we're talking about discipline, what should be the asset allocation strategy that investors should follow, post budget, and how much one should place towards the international diversification? Because this is something which has really come up in the year 2020, and investing abroad has made more simpler. I know it it was not available to retail investors. A lot of brokerage firms didn't have that kind of platform, but now most of the platforms have this option available, and a lot of people are actually putting money abroad. So just to throw some light, what are your trends you're observing at Sherkhan, Mr. Arora?
So we don't have this on our platform as of now. We are looking at it. If there's a need, we'll definitely add it. But I think there are some easier options for customers to go through some some mutual funds which have exposure to internal market like Nasdaq or the
Sure.
FANG stocks. So something that will be easier option. That's something customer can start looking to allocate in this year. Because there are a lot of brands now are global. Like you have a lot of stocks which people consume, whether it's any country you are there. So I think that's something could be a good way of starting investing in the international markets through this model.
Right. And right, Mr. Bhardwaj, what is the asset allocation strategy which one should follow, and what is the trend that you're seeing with respect to international diversification? Are you also getting a lot of queries around that?
Yeah, I think international exposure is the top of the pudding. That is what I look at it. In fact, the 2020 has fueled that customers are looking at to invest globally, and being digital and solutions available, that has become a lot more easy. We at this point in time are also not available at this for international investing, but very soon we are launching our international investing options for our customer. But I personally feel that India has a lot more growth potential. But as a customer, they should be invested across all growing and growth markets. So if I look at Indian point of view, one should continue to invest in equities and should allocate roughly 70% in their equity segment. And internationally, they should try maximize the growth potential up to kind of 10%, and remaining they can stay invested in debt or gold side.
Right. And now that we talked about the discipline, another major event that happened was the sudden volatility caused by the GameStop. Can a similar thing happen in India? And do hedge funds also operate with a similar freedom as they do in the US? Now, this is something which we got as a query from a lot of retail investors on our social media platforms, and probably not just us, but all the retail investors who are there listening to you want to know that what are the is this something which is possible here in India as well? Is shorting that easy that we've seen in the US? And can a similar happen, or can a similar event can turn out here in India? Because social media remains to be a dominant force, but not all social media platforms. That means or the people who are recommending on the social media could be SEBI qualified, which is one of the which is one of the conditions that SEBI has laid out, that recommendations can only be done with SEBI qualified advisors. So just your viewpoint on that, Mr. Arora.
So it's a very interesting question, and this is what I think can possibly happen in India. So number one, in India compared to US, shorting is not that easy. You can go short in the market through obviously index futures and stock futures, and obviously the other way obviously is taking a position options. But the short squeeze, that possibility is less likely to happen in India, because it's not there in the market as prevalent as there in the US, which is a product which is sold by almost all brokers. Second is the hedge fund leverage is very, very high in the US markets. In India, I think hedge funds are not that big a force in the domestic market. We have a lot of hedge fund inflow from overseas. And also the leverage is quite limited because of the prudent norms put by the SEBI or regulator. So it can happen. There can be speculation. There can be because of social media, there can be trends which can lead to speculation market. That's possible, and that's an important question for regulators: how to control it, how to contain it, to ensure the integrity of the market. But I think that kind of thing is slightly less likely to happen in India. That's what I believe.
Right, and that's a good news for retail investors. Mr. Bhardwaj, what are your viewpoint on that?
So I feel the Indian market is more regulated than in comparison to US. US is a little more free market. And Indian regulator have always taken a steps in the interest of retail customers. So there's unlikely to happen such events in Indian context. In short selling, they have already put in enough measures which stops moving any stocks to that level what has happened in the GameStop. So I personally feel that though it remains challenge, because what has happened till now is not necessary, will not happen in future, but remain challenge for regulator to make it more customer friendly, where they can protect the retail customer interest, also govern the corporates interest in where the people can do short squeeze or short selling and can take any company to the right.
Right. And, another important or another big, you could say, trend which has emerged in the year 2020 was the primary markets. We saw a lot of
Yeah.
funds flowing into the IPO market, and, it looked like, every company would want to list and get the subscription. And we are seeing multiple times subscription with respect to IPO. So primary market were buzzing in 2020, and, LIC IPO getting a green light from the FM was bigger thumbs up. How big it could be, and do you think that it could be biggest ever in India? I mean, after listing, Mr. Arora, what are your views on that?
So I think that's one of the biggest news for the Indian primary market, because if you look at LIC as a stock and the brand, it reaches to almost every town, every small town, village. I read
Absolutely.
somewhere that 290 million people are policy holders, and it has a distribution of almost 11 lakh agents, offices. So it's there almost everywhere. First of all, I think one, obviously, when it gets listed, it is going to be one of the largest companies listed. That's fact, because it deserves that kind of valuation to be in the top 5. This is what I understand on the first information received. Second, to bring the whole cult of IPO to every town, every small place, and that something is very positive. That will bring, there's a concept of stock IPO, people who have never have done it. So that's something is the most positive sign I'm looking at.
No, absolutely. And in fact, Mr. Bhardwaj, I might not own a stock, but I own a policy. I mean,
Yes.
that is the kind of emotion that we go with, and this might be relevant not just for me, but a lot of people in India. They might not have any interest in a stock market, but they own a policy. I mean, LIC policy is something
Yes.
which is anyways there with the person, and they could actually relate to the brand. And this is one of the biggest themes which has come out in the budget is stay with themes which are economy linked, and which you look and feel, and you are consuming. So, and LIC is something which we are consuming on a yearly basis. I mean, if you're paying the premium yearly, so that's coming out. So yeah, that is one big emotion which is there with the LIC. And what are your takeaways? What are your views on that, Mr. Bhardwaj, on the LIC?
Kshitij, I feel LIC is a name of every household. So it is not
True.
a new name for anybody in India. So when LIC
Yeah.
IPO comes with, it's going to be festival season in India. That is what I can look at it. It's kind
It
of
will crowd
Diwali.
out the
People will,
market.
So it's going to be Diwali movement in India, where it will kick off the sentiment across all segments, whether it is a rural, urban. So everyone is connected to the LIC as a whole. So it is going to be the mother of all IPOs. That is what I can anticipate, and that will fuel I think multi-decade kind of movement in the markets, and people would certainly like to own such stocks which can be prestigious for one to have.
Absolutely. So, mother of all IPOs, that is the key takeaway from Mr. Bhardwaj, and
Yeah.
that could be the tagline as well. IPOs, mother of all IPOs. And, I was just assuming that what we will do with the BSE market capitalization, which touched 200 lakh crores just yesterday, or in the week gone by. So, yeah, I mean, what is the kind of market cap we are looking at? But anyways, the finer details will anyways come later on. But the good point is that LIC IPO will give a good leg up to the IPO season that we have seen in the year 2020, and it will probably continue in the year 2021. A lot of it we've already seen, in the first 2 months of the new year. Now, probably the final question I want to put it across to you is that how do you rate the budget on a scale of 1 to 10, and why?
So it's okay. So I'll
Yes,
respond first.
yes, Mr.
So
Arora, yes.
I'll put 9 out of 10, being the highest. So
Yeah.
I'm taking 1 mark only for, I wish they had cut more taxes, and
Okay.
believe that the lower taxes will lead to more growth, and eventually the government will get more money. So that's the only. Otherwise, I think it's amazingly positive. It's, in a way, I think Madam was right. It's a historic budget, and the
Right.
market has shown by the response.
Right. In fact, she clarified that if I had more room, I would have never laid any taxes or probably cut taxes. So yeah, she clarified that bit in one of the press conferences. What are your views on that, so Mr. Bhartwa? How do you
So
rate the budget?
I personally rate the budget, I think 10 out of 10, especially given the current circumstances, because everybody was anticipating it's going to be suppressive budget, introduction of more taxes, in fact, and lot more focus on, cutting expenditures. Rather than all those things were kept away and the entire focus kept on growth and development. So as we say, growth, growth, and growth. So keeping that in mind, if whatever has been talked about gets implemented, I personally believe that it is going to be really good for Indian economy as well as for the markets. So in that context, I personally rate this budget 10 out of 10.
All right. So big thumbs up to the budget from our experts and from the markets. And why not? We're seeing a good bit of rally here in the in the benchmark indices as well as in the broader markets. Well, that's it from now. And thank you, Mr. Sandeep Bhardwaj and Jaideep Arora, for tuning into this show on markets. I mean, decoding budget 21 and the impact on markets and retail investors. Well, stay tuned to moneycontrol.com for more on news, business, and economy. Thank you so much for your time.